Welcome to the Value Builder Podcast, where we focus on real estate with a value-add mindset. Real strategies, real operators, real outcomes. Let's dive in.
Over the last year on the Value Builder Podcast, we've sat down with developers, operators, investors, entrepreneurs, brokers, and builders from all commercial real estate. Different markets, different backgrounds, different strategies, but after enough conversations, patterns starting to emerge. And the best operators, I think differently. They play longer games, they focus on fundamentals, and most all of them learn success the hard way. So for 1 year anniversary, we pulled together some of the most impactful moments, lessons in the conversations for 1 year of Value Builder Podcast. So please enjoy, guys.
So I'm like you, I'm an immigrant. I'm proud to be an immigrant. I came from the former Soviet Union, you as well, Lithuania, Ukraine. And for me, it was actually illegal. My dad actually had a little business he was doing as we were leaving the country. It was illegal to have your own business in the Soviet Union.
Yeah.
If you got caught, you'd be in jail.
Oh, yeah, I remember that.
You remember that?
I remember that exactly.
Yeah. So to me, to be in America is just a gift and a privilege to have a business. And I've always had a business. So starting from a young age.
So what are you excessively anxious about?
Always pressing to make sure that you're doing enough. In entrepreneurship, you can work 24 hours a day. Like I get up at 4 a.m. I work till late at night. Like you do a lot, but for some reason, I feel like in entrepreneurship, you always feel anxious that you're not doing enough or that you're behind what everybody else is doing.
Yeah.
I don't know if everyone feels like that, but I always feel like that. I
can relate to that.
You get on LinkedIn, like you talk about LinkedIn, you get on LinkedIn, you're like, these guys are killing it. What do we do with our lives?
One thing came over and over this year, that entrepreneurship rarely feels comfortable. Even most successful operators talked about anxiety, certainty, pressure, and consistently questioning themselves. Outside the world sees confidence, but most entrepreneurs feel the responsibility. What separates from ones who do not make it and who make it in the top 5%?
Sure.
What are those main one or two traits?
They have to almost be foolish. They have to be willing to be a fool. Almost like a childlike naivete, right? Like you have to just like not care what anyone thinks, and people might think you're crazy. Why would someone that owns a $10 million building trust a guy that's never sold a building with that assignment? Well, you have to kind of be crazy enough to believe that, I don't know, but I'm gonna have a conversation and find out. So the folks that just don't let circumstances stop them before they even get to the table, that's a trait that I wouldn't trade for anything. I'd rather just be that courageous and that curious to be willing to make a fool of myself. And I do it every day.
When you get a home run once in a while. This business does not work if you go only for home runs. And this business does not work if you go only for singles. You're hitting singles, we'll call it 20, 30, 40, 50. You have to keep hitting singles in order once in a while to get a home run. So, but if you're not swinging the bat, you're not getting those home runs, and there are folks, and I was probably guilty of that when I was trying to optimize a lot of times only for singles to get those averages, right? Dialed in those averages, so they just keep feeding the machine and giving averages, getting a lot of singles and be very predictable. A lot of times marketing and operation costs just drown you in not being profitable.
I think they should look and see if what they're doing, whatever it is working because they're lucky or working because they figured something out. And some people get blinded, including me, thinking you're smart when you're just not lucky, but you're in the right place at the right time. And the problem with being that is the times change. And then you find out, oh, I wasn't lucky. Just everyone was buying, storage was hot for 3 years. And I just happened to think I was a storage genius. And so you got to do that yourself because no one's going to do it for you. And then if you are lucky, reality will level set and you'll realize I wasn't lucky. And so that's my concern because there's a lot of unknown. I mean, I have tariffs and interest rates, all that stuff. It's all headwinds we all have, but we all have successes. So I would say, look at your success and say, okay, can I do that again in a different environment? That means you figured out something.
I'm of the belief of ELF, E-L-F, which is easy, lucrative, and fun.
This is great filter, man,
Yeah.
That's
if it's
gem.
not easy, lucrative, and fun, I don't want to have anything to do with it. And I had a podcast, and I can remember I got to the point where I don't want to do this again. The advertisers just do not pay nothing, pennies, right? And so you really can't make money. And it just wasn't fun anymore. I probably did 10 things like that. And I guess I'm lucky enough that I was able to quit a lot of them I didn't have a lot invested. I didn't have any investors that I was beholden to or anything like that. They were all small startups. And then the DAPT acquisitions and the GoBundance, I was able to start those with friends. So they were fun, easy because I wasn't the one running them. And certainly both lucrative. You know, in the beginning, nothing is lucrative, but over time, lucrative. Now both of them are running on all cylinders. They're doing excellent. I'm very happy with both of them.
You have this magic touch. When you get involved, I've seen it over and over and over. It expands exponentially. Not saying everything expands right away, but when it hits, it hits. A number of things that just goes through the stratosphere when you get involved. It's just the magic you have.
Well, thank you. I'm very fortunate, very grateful, and I'm very appreciative of partners and the people that I got in the business with and the people that have come work for us over the years. So
another theme we kept hearing: markets change, cycle change, technology changes, but fundamentals still matter. Location, demand, replacement cost, tenant quality, execution. The best operators never stop respecting the basics.
Bullet points, I would think all day for us, it's a good deal. And it's a good asset class to get in. So first of all, supply and demand. So the way I look at supply and demand in small bay industrial is, first of all, it's really cost prohibitive right now to build a small bay industrial. All right. So let's say if you're going to try to build in any part of the country, you know, it could range between on the low and $100 to $130 all the way to like $200 a foot. Right?
Yeah.
And once you build at these prices, you have to lease, you know, call it, you know, 15, 16 per net, and really just too expensive for those small businesses.
Totally.
Let's say in Chicagoland, right now, we'll probably see the prices increase, maybe, you know, $10, $12, $13 triple net. But if you're going to build, you're not going to be able to make money. What it equates to that is a lot of pent-up demand because just not enough product.
Institutional buyers there will buy metal buildings, and it's no more longer a stigma anymore, right? Like it used to be before.
Yeah, I'll tell you the highest price per square foot that we've done is metal products, and a lot more consistent too, because I mean, you gotta keep in mind, I mean, some of these are getting, you know, 16, 17, 18, 19 bucks plus net, is to where, you know, a lot of infills, you know, barely trying to get 12, 13 or 14.
Yeah.
10, you know, as well. Like we were looking at a project yesterday out here in the mid cities. It's at 10. And so,
Why?
but like,
Is that
it's
clear height?
well, it's a little bit of everything, but you know, that tenant base that's in that infill, I mean, it's that established tenant base. That area is already built out. It already has that contractor, that tenant base that's servicing the area. It's not a lot of growing on the business side. It's to where when you go a little bit farther out and you got all that nice new home construction going on, you got, you know, sometimes higher end home values, you start to get that high payer tenant that you're not going to see so much out here.
The other one I love, and I don't know if we've got a true name for it. I keep calling them the man cave garages. I've heard them called the flex garages, the toy garages, but these kind of condoized or even just leasing them, basically a garage. You could park your boats, your cars, you could put a small business in there. They truly are a flex warehouse product, but they are much smaller. And they are not necessarily always commercial. I love these products because there is demand, especially you put it in a little of a nicer neighborhood.
We can tell you, hey, look, I know you think you want to save some money and do this like boring gray industrial carpet, like spend another 60 cents a foot and get LVP in, get the fake wood LVP. And I can now tell them, I'm like, hey, I'm not a waiter upselling you at a restaurant so that you tip me more. I'm telling you, if you spend $5,000 more on this construction thing, your space will lease 3 times faster.
Yeah.
Because it's not like my hat of being a broker and an owner and running the management company. That doesn't go away, right? You're still getting the benefit of all that expertise just in a construction format. And so I think bringing that expertise on the contractor side really resonates well with our clients.
The key, it boils down to knowing your market better than any human alive.
Amazing, yeah.
Knowing not just the properties, because, you know, if you want to succeed in the real estate, if you're going to take the real estate business seriously, you have to take it seriously, right? You better know construction, because real estate is construction, construction is real estate. You have to know the land and zoning codes. You have to know contract, you know, tenant landlord law. You really have to be well versed in all aspects of real estate. That's why it's never ending game. It's never ending education.
Every week, I read hundreds of commercial real estate articles from across the US and around the world. I connect the signals, break down the Fed moves, and share real case studies, not theory, from my 2 decades of real estate experience and actively doing deals right now. My team and I spend 15 plus hours on a weekly basis and deliver this to you for free. You can read it in 5 minutes. So every Sunday at 9:07 a.m., you'll get major commercial real estate news that matters, one Fed insights that matters, one deep dive case study from me or one of our operators who already made the mistakes, so you don't have to. Thousands of commercial real estate operators and investors read this newsletter, especially in the value add space. And don't take my word for it. Check out hundreds of reader testimonials online. Plus, when you subscribe, you get instant access to a Perform underwriting tool, the same one we use every single day to underwrite value add deals. Now, this is not for you if you're looking to get rich quick schemes, or if you're looking for theory and hallucinations, not real numbers, or you're not serious about commercial real estate. But if you want real tactics, real deals, real results, no bait and switch, go to joinvaluebuilder.com and subscribe for free. And see you there, guys.
Well, one of the things that does correlate from the downturn to downturn is contrarian investing. And contrarian investors who have bought in a down market have traditionally throughout my career done spectacularly well. So I think we're there as well right now. I think another thing that we add to the current market is because of the rapid rate increases in interest rates we had from the Fed, and then the inflation and COVID, and then tariffs, add all that up, new construction has really trailed off.
Now, the broker has whispered to me that he has an offer, actually has multiple offers, and one of them is full asking price. After underwriting, I told him, look, I'll be substantially lower than you have offers. So I'll just take my offer off the table. I'm not submitting it. I just don't want to insult you, or I don't want to come across and consider to the seller. If it doesn't go through, call me back and we'll talk then. And guess what? Yesterday he calls me back and he says, hey, our highest offer may not go through, so I suggest to submit your offer. And right now I'm in a way better position. Instead of submitting then at that time lowball offer, I will submit even lower offer than I thought initially, because he's asking, and I'm not going to come across inconsiderate because I gave my reasoning why I'm submitting this offer that works for me, and here's why. We'll see if we'll get it. If we'll get it, it's great. If not, that's the strategy I use to submit those offers that don't meet pricing guidance for the seller, even though on paper it looks good.
I'm less focused on yield and less focused on kind of the current cash on cash. I'd rather buy a property that cash flows 5% and is going to be much stronger in 5 years than a property that cash flows 10% and is going to have huge headaches and potential of lease turnover or tenants leaving and just not a good piece of real estate. So we're trying to build the best of the best in terms of like best assets and best real estate. We're not just trying to flip and make a buck quick. That's not what we're building. What we're building is kind of institutional quality, investment grade tenants.
A lot of people think real estate is just about making money, but deeper conversations this year were really about leverage, ownership, long-term thinking, giving back, building assets instead of income, building relationship instead of transactions, and understanding how capital actually works.
Sure. So in terms of depreciation, commercial assets are underwritten and can be written off over the long period of time, from 25 to 35 years, depending on the asset. There is a way to accelerate that depreciation. In other words, take a bigger write-off, a higher deduction initially upfront. The way to do it is by performing cost segregation. Segregation is typically performed by engineers, and what they do is they take a property, let's say it's a retail building, and they break it down into pieces: doors, windows, flooring, roof, and so forth. Each piece of the property has its own lifespan. That lifespan is usually a lot shorter than 25 to 35 years.
It's shifting your mindset from cash flow mindset to asset mindset. So yeah, take 400,000. So that's your, or whatever it is, that base. And the remaining, you're not looking how much business is going to make this year and take it out, that oxygen. Or if the business is going to be worth more than in 5 years or 10 years more than keeping the money and compounding that ROI compared to you putting that, sucking out and putting
You're switching
someone
the
else.
game. You're switching the game you're playing. The first part you're talking about, you're playing the income game.
Yeah.
When you look up and you say, I won that game, then you shift to an enterprise value or an asset value game. You could have been still playing that in while you were working.
But you can compare it. You can compare, what's worth more for you, worth more to you and to your family than when the asset appreciates. You don't take it out the first year.
Right.
Wide
So you
receiver.
say, I'm done playing the income. I don't need the income anymore because I've been making $2 million for 10 years and I live on 400 grand. And so we have plenty of money and so I'm good. So I'm done playing the income game. This next phase for me is I'm going to play the value game. What is the thing that I build from this point forward? What is it? What is the value of it? Right?
That's
What is
amazing.
the value of the portfolio you're building, or what is the value of the organization if you were to sell it?
So for anyone looking to raise capital, I call it the 6 C's of raising capital, right? And it really comes down to a framework to help you understand, one, if you're ready to raise capital, and two, how to get it done. So it's like kind of an assessment, but also the steps that you need to do. The first C is going to be confidence, okay? And I don't mean confidence from just faking it till you make it, or blind hubris. I mean confidence that comes from putting in the reps, knowing your stuff, right? Analyzing deals, understanding the numbers, understanding what a good deal looks like. You have to have confidence. That way, when you're speaking to people, you actually know what you're talking about. So again, I'm not talking about just faking it, but know your stuff. Even if you've never done a deal before, you should put enough reps to understand what that looks like. That comes from listening to podcasts like this, reading books, articles, getting on forums, joining masterminds, getting a coach or a mentor, but really taking action and analyzing deals so you understand what a great opportunity looks like.
We say at the beginning of the process, we say, look, we like celebrating, and we would love to celebrate with you at the end of this. Once we close at your favorite restaurant that you choose, one of us, either me or my business partner, will fly out and have a dinner with them. And we do it. And we do it, and it seems just like a small thing, but it's like people value that stuff, and like especially, honestly, and we do it even whether the person has other buildings to sell or not, because you never know, right? You never know. It's really about developing those relationships.
The most surprising part of this year wasn't the deals. It was often how conversations came back to purpose, family, faith, impact, freedom, health, fulfillment, and a lot of best operators weren't just building portfolios, they were building lives intentionally.
So on a personal level, what do you dream of achieving one day through your work in real estate?
Yeah. That's a great question. I have a daughter. She's 15 months, about to be 16 months, and she's, turned into my best friend. My wife is also my best friend, but my daughter's, my new best friend. What I hope to be able to do is take her to these properties, show her them, right? I have this dream of saying like, hey, maybe she's not going to be a real estate investor in the future, but being able to like walk with her on their property, show her what I've built or what I've bought and where we've been able to take it. That's what I'm envisioning years down the line where, she's playing on the properties that I own.
So we've got all these entrepreneurs, including myself, that start a business and they say, when I can get to $10 million or whatever your number is, I'm going to be so happy. I'm going to have all this time, blah, blah, blah. The truth is that will never happen. And here's why, because nothing outside of yourself can bring you happiness. That's why there's billionaires today that are contemplating suicide. The beautiful thing about the work that I've done and that we continue to do with clients is that we can teach you how to get to the state that you think $10 million will bring you. We can teach you how to do that in a 5-week session. When you get to that place that you think money can get you, then you are much more likely to actually get to the place you wanted to go, because like me, you aren't doing it to feel better about yourself. You're doing it to create impact in the world.
I had a life-altering car accident in my 20s and was given a second chance at life. And that's something that I've really held deep in my heart and also has really given me a zest for living fully. And I ask myself each day of how can I live even more fully? And how do I help others do this through commercial real estate and being active? And with that, in 2019, my brother and sister-in-law were like, hey, we're running New York. You want to join us? And I was like, let me sleep on it, because I ran one marathon 17 years prior and I hated it. So I said, never again. And so fast forward, it's 2019 and I decided, I had ran about 24 half marathons at that point. And I just said, you're getting too comfortable, Heather. It's time to shake it up, go back into the unknown. So that's what I did. And what was interesting was through that training process, it just broke down some of the inner barriers and some of the stories that we tell ourselves, right? The self-limiting beliefs.
Yes.
And I ran it and I loved it.
within that same year, actually about a year before the drug addiction finally was history. And really, that's the foundation of my success. There are biblical principles that show up in running a business and, receiving or creating prosperity, receiving the blessing, if you will, that comes from the book, that comes from reading the Bible. So really that's where it all started, and the consistent building of Dan Breslin's life really started. Reading the Bible 2011 and then getting clean in 2012.
So I know that you co-founded your company, Ever4 Capital Partners, with your mom and grandmother, right? Whose idea was that? I'm just, trying to understand. Can you unpack that for us?
We have this one particular phrase, sempre à frente, which basically translates into English, ever forward, always forward, keep your head up. Doesn't matter, don't look back, just keep moving forward. And we didn't want to put sempre à frente Capital Partners because that would be very much a tongue twister for those that don't understand it or don't speak the language. So we translated it, and we found out that ever forward was the best thing, because that was like our mantra, our story. It didn't matter if there was, something happens, or if something, there's a roadblock, ever forward, keep your head up, keep moving forward, because the mission's still there. It doesn't matter whether it's a rainy or a sunny day, the mission's still there, so just keep going for it. Doesn't matter if you're sad or happy, keep going for it. The mission doesn't change, you change, so just move ever forward. So when we came up with that company name, it was like, yeah, we resonate with this.
So when you're in, one thing has become very clear to me. The best builders are rarely chasing shortcuts. They keep thinking long term. They keep learning. They stay resilient through cycles, and they keep moving forward when the things get even hard. So to every listener, every guest, every subscriber, every supporter of Value Builder Podcast, thank you for being part of year one, and we're just getting started. Thank you, guys.
You've been listening to the Value Builder Podcast. For more strategies, stories, and episodes, head to valuebuilder.co or subscribe on your favorite app. Always make it better than you found it, and keep adding value. See you in the next one.